Hi, this is Vijay Bambani, and in this video, I want to talk to you about an important aspect of the market that you must monitor whether you trade this segment or not. Friends, I want to talk to you about why the US dollar matters, why you must care about where it is trading, and how it impacts your trades even in the equities and definitely in the commodities markets. So let's talk about why the dollar really matters. You see, since independence, India has been a net importing country, which means our imports far exceed our exports. And therefore, the currency peg or the value of the rupee versus the dollar really makes a lot of difference. And since 2/3 of all our imports are energy, which is crude oil and natural gas, which happen to be multiplier commodities. So if crude oil and natural gas prices go up, everything from milk, vegetables, meats, eggs, grains, pulses, etc., everything goes up. And then it impacts our household savings and by default the equity markets. And even if the price of energy remains constant, but if the rupee weakens against the dollar, the landed price of imported fuels is higher, which results in imported inflation. So even if crude and gas don't really appreciate, but the dollar appreciates against the rupee, you're going to have a problem. And in terms of equity markets, there is another even more direct correlation which you must monitor. You see, the currency crisis of 1997 in Southeast Asia taught us that not only is the equity market impacted, but even the real economy, which can be disconnected from the stock market. I don't need to remind you how after the COVID-based lockdowns in March 2020, you see shops, factories and offices shut, but the stock markets are booming, which means that the real economy is somewhat disconnected from Dalal Street's economy. So the dollar, as the Southeast Asian currency crisis taught us, can actually impact even the real economies. Let me explain to you how and why. Supposing you are running a company, a listed entity, and you have a lot of borrowings from overseas in dollar denominated terms. Now, if the dollar was to jump, say 20% hypothetically, and not only are you going to repay this debt in dollars, but you're servicing this debt, which means paying interest in dollars. So if the dollar appreciates 20% against the rupee, without you borrowing even one extra dollar, your liability goes up by 20% because you need to pay that many more rupees to buy the dollars and repay your debts. And not only that, but the interest that you're paying, whether it is monthly, quarterly or annually, also becomes 20% higher because you have to pay that interest in dollars. If you're an importer, whatever you import becomes that much more expensive. Take a look at electronic items like televisions, refrigerators, air conditioners, mobile phones, computers, etc. On the flip side, if you're an exporter, say technology companies like Infosys, TCS, HCL Technology, Wipro, etc., etc., these will make windfall profits because the dollar is stronger and therefore they will make more rupees for every dollar worth of exports that they report. So whether you like it or not, the US dollar impacts our trades and investments both directly and indirectly. If at all you see the dollar opening at 9 o'clock, the beauty of the market is that the currency market opens at 9 o'clock, the equity market hypothetically opens at 9 but actually starts trading at 9:15. So you have that 15-minute window period to see where the dollar is opening. Note what happens when the dollar opens sharply higher on any given day, or even after opening quietly, it goes sharply higher, say 0.75% or 1% preferably. So if the dollar goes up by 1%, you will realize that stocks of import dependent companies tend to fall. You can Google search for yourself top 10 listed companies with highest foreign exchange debt. You will see that their shares fall on that particular day. And you will see that the shares of technology company, all other factors remaining constant, there are no bad news about H-1B visas or curbs on Indian companies' exports of technology, etc. If those other extraneous news items are not there, then technology stocks will do well. In the case of commodities, if the US dollar is stronger against the rupee, you will see that gold and silver on the MCX, all other factors remaining constant, will be marked up as compared to the previous day's close. Same with natural gas and crude oil. So you see, whether you choose to trade the dollar or not, that is of course a matter of your own choice. But you will ignore the USD INR at your own peril, at your own risk. It is like trying to cross the road with one eye closed. It is better to have a three-dimensional view of the ongoing and oncoming traffic by keeping both your eyes open and seeing what the market is trying to tell you between 9 and 9:15 when the currency market is open, so that you can base your trades accordingly after 9:15, even in the equities and to that extent even the commodity markets. I think this is something that you should follow immediately. As I record this video on a Monday morning and it will be uploaded on Equity Masters playlist on Tuesday, you should start following this regimen on the very next day and see how it impacts your trading and decision making. On this cheerful note, I bid goodbye to you, not before reminding you to click like on this video if you agree with what you saw and what you liked it. Subscribe to my YouTube channel if you haven't already done so. In the comment section, do let me know what you think of this video. Good, bad or ugly, your feedback is always welcome. And help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. I wish you have a very, very profitable day, my friends. Take very good care of your health, your investments, trades, family and friends. Thank you for your patience and watching my video till we meet again in my video again tomorrow. Take care. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.